Okay, welcome everyone to a new video on the Alien Algo channel. This video will be talking about the trading pattern I like to use quite often. I call it the 1, 2, 3 boom. Okay? Childish name, and I don't care. Yes, it's quite simply, it looks like a head and shoulders pattern or inverse head and shoulders pattern, depending on the side that is given. This also can be closer to each other, because like here, you see it is quite lengthy. It's quite far away from each other, right? Okay. It can also be found like this. Here it's way closer to each other, but still having the same effect. Yes? Here, of course, we know how this played out. You got a 30% dump after this. Here again. You have your wick being made. You sweep that wick and you create a higher low. Okay? This is the simplest way to explain this pattern. It is, as most people I think can see, based on the head and shoulders pattern. But the thing with the head and shoulders pattern is it is a common pattern. So, what do we know with everything that is common? It is being used to manipulate the masses. Okay? What do we want to do? Not get fucked like the masses. Okay? Here again. 1, 2, 3. And it bleeds. But what would the regular person do while they are watching at their head and shoulders pattern? They look at the neckline break. If you would have done this here, what would have happened? You either paid a really tiny amount of profit, or you would have round-tripped your profit and perhaps even ended in a loss. Yes, the same would have happened here. If you were to wait for a neckline break, here, you would have get fucked. Okay, here, look, this is the only one that worked out. But still, if you would have entered on a neckline break with a very wide stop, let's even say you had this as an entry, yes? And this was your stop and this was your take profit around that 100k mark. Yes, looks like a decent trade. But here comes the thing. If I enter here on the third leg, who has the better trade? You tell me. Just look at the potential upside and the potential downside and the risk to reward. 2.76, 6.34, potential profit of 80%, potential profit of 60%, a stop of 21.98%, a stop of only 12.66%. Here you see the big difference. Okay, but then you ask the question, how do we catch this low then? Well, I take this. It depends a little bit on the way that the sweep was made. Because let's just put the line here to show the wick and the sweep. Okay? Now, here we had an aggressive sweep with a quick dieback above. Yes? What I like to do is, usually most people will take either the wick, for example, and put it here, or sometimes even here. But then the question is, when do I enter? When it comes into the zone? When it gets back out of the zone? And this is what I like to do instead. I take the slaughterhouse. Yes, and we looked at previously, it's a Fibonacci sequence with the inputs 0, 0.25, 0.5, 0.75, and the level 1. Okay, now let's look how we can use this to get a more accurate look. Most people never even think about this. This was just a thing I thought about to solve my own problems back in the day. Yes, here you see. You're reclaiming your level, giving you the possibility to enter on this candle, on this opening. Yes, because you see, rejection, indecisive candle, holding. Yes, so you could have entered on the open of this candle, which would have given you an entry around here, depending on your speed, of course. The same logic can, of course, be applied to all of these setups. So let's take this one again. I'll draw it a little cleaner. So you have your wick, you sweep your wick. Well, the logic we just wanted to do here, it also was quite an aggressive one. So we will be taking the full candle from the top wick to this, the same way we did it here. Yes? And look what happened. You get your rejections around that 0.5 level. And either this was your entry, or this was your entry. And why do I think this is so effective? Because if you just look at the regular person trading that head and shoulders, yes, they would have either seen this as their third leg, but then they wait for the neckline to break. Wow. Okay, it worked out. Because you had your neckline right there. So, this was your neckline. It's the bounce between the heads. And you get your clean retest. But here comes the thing. Who has the better trade again? Break, retest. Beautiful execution. And now you see the strength again. Here you can even use a wider stop loss, because it's quite simple, your downside is so much bigger. And if you would have played it safe, I would have put it here. Yes. And here you even see, if you would have played it this way, you would have had a trade either here, you could have exited, or you would have stayed in the trade, and perhaps even get the second trade. Well, if you're just waiting for that head and shoulders break retest, this was the only thing you did. But yet, there was at least this part of downside that you could have traded before getting an entry. Okay? Now, let's go onto a lower time frame. First I'll get this one as well. Okay, here you see, this sweep was less aggressive. It didn't really quickly get below like the other ones did, right? Okay, with that said, how do we draw it then? And I look at the point that started the sweep, okay? Which was this for me. And this is why I often say, price action is never the same, but it often rhymes. Okay, and there you see what happened again. And this is where someone would have entered on the break retest, giving them this, really short. Okay, it was a good trade, but how much did you leave behind again? It was quite a clean trade, but like I said, what are you leaving behind? Because if I was able to enter here, it would give me the opportunity to make this neckline my take profit 1. Well, you aren't even in the trade yet. Okay? Now, let's look if we can find this pattern on a lower time frame, because it sets up quite often. I'm pretty sure we had one on the 1 minute yesterday. Yes. No, was during the night, I think. Yes, perfect. Okay. Yeah, here. Perfect. Okay, you have your sweep. Yes. The tiny move. Confirming. And let's just put the logic behind this, yes? Okay, what happens here? A big downtrend. Excuse me. The downtrend stops. Is what the masses here think. Because it starts moving up. So what can you expect that people did here? They went long. How did they go long? This is just the way to understand why liquidity is at certain places. This is what happens. And it doesn't matter if they entered here, 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 or here. All of them put their stops below the recent low, adding liquidity towards the downside. And this is where we want to play. We want to wait till the masses get fucked and then we enter. Quite simple logic, right? Okay, so now that we have gotten this down, we know liquidity is down here. So we expect a sweep. It reclaims. Because there comes the thing, if it didn't reclaim, there would be a very high chance of this just breaking down. Let's see if we can find one without a reclaim. Yeah, perfect. I don't really see one as of now. Okay, but you see the reclaim, and how do we catch this leg again? Because most people will just be looking at head and your two shoulders, waiting for that neckline to break and or retest. Sometimes they would even see this as your neckline, meaning they didn't even get an entry. Well, you had the chance to position yourself there. But how? You again get your slaughterhouse, you put it right there, and you see that the same logic applies. And it really doesn't matter what time frame you're on, because this just sets up on most time frames. And I'm quite certain we've had one even later today. We had one at the upside. Yes, perfect. Here. Again, see the same pattern. You create your wick with a downwards move. People think this was the high, and they start shorting here. And even if they had a great entry, they would have had their stops right here, resolving again in a loss. So, what do we know when this happens? Liquidity is created above. So, what do? We expect the sweep. We don't play the sweep. No. We look at this, and here you see this was a quite aggressive one. And this is why I say you draw it different sometimes, but the logic of the pattern remains the same. So here you will see how I draw it a bit different than the one below. Okay. Actually, I do even take this part with it. Yes. Here you see small movement, so the slaughterhouse will be smaller. Big movement, the slaughterhouse will be bigger. Okay? And yet again. You have your eye, you sweep, and you plot your lower high. Yes? And where do the head and shoulders traders get in again? Here. On that neckline break. Here. This is where they get in. This is where we want to get in. How do we do it again? Now, you saw. Well, trading view is just freezing. Okay, that's interesting. Okay, we're back. Let's just take it again. From the downside towards the upside. Okay, and here you already see. This time, it's the same. Here, it is different. Here it is a lot wider. And this logic, like I said, can be applied to any given time frame. And you will see that your retest level for the second shoulder will be different. It will be different a little bit, at least. Because simply price action is never the same. Because also a double top, one time a double top is literally symmetrical. The other time a double top is more plotted like this. That one time it's lower than the other. Or you even see it like this. Okay? So this is why I say you just need to understand the logic of a level being created. Yeah, so a downwards move, and we have that short move towards the upside. This is where we want to look for a sweep, because we know people went long on this part. Okay? And then we expect this sweep. But here comes the thing. If there is no reclaim of this level, we are not taking the trade. Because if we go above this is your chance. Yes? But there comes the thing. What if we don't reclaim it? Then you simply get a break retest and the trend continues. And this is not your reversal pattern. This is also, I think, Factor spoke about this. The difference between a sweep and a break. When you have your wick, like here, will this be a break or will this be a sweep? Well, we will find out really quickly, because it simply needs to reclaim this level. And if it doesn't, this is a break. This is not a sweep, unless it comes above here. Yes? So, how can we identify if this could become a third one if price manages to push above, giving us that second shoulder? But if price doesn't, well, it simply breaks. Okay? This is the way to look at it. I hope this has been useful, and why I said advanced levels, how to use this if you simply use the slaughterhouse, for example. What do a lot of people do? They look at an order block, example here, and they put a box like this, or sometimes they do it like this. What I instead do, okay, I take my slaughterhouse, I draw it on top of the box, and it just gives me more defined levels within this order block. Yes? And here, if you zoom in, what did you get? A higher low being plotted, and then the market started moving up. Okay? This is the way I want you guys to look at it. And this, of course, can be applied to any side of the market, whether you're watching the 1 day time frame, whether you're watching the 4 hour, 1 hour, 50 minutes, 5 minutes. 3 minutes, 1 minute, it doesn't really matter. Here you again see the setup, 1 being reclaimed and it moving up. And here the average person is awaiting for the reclaim of the neckline while you're already in the trade and maybe even took your partial profits. Okay guys, without more being said, have a nice day and keep on trading. Goodbye.